Q1 results of Shree Cements were disappointing. While the headline numbers appear decent, the operational performance was weak on key parameters. Let's do a three-point analysis of the earnings fine print and the outlook on the company. 1. What does the earnings picture tell us? Well, the top line was marginally lower. EBITDA increased by 13% year-on-year as margins expanded by close to 400 basis points. Weakness in the overall demand scenario had a significant impact on cement volumes, which contracted by 13% year-on-year. However, this was offset by higher cement prices, which aided the margin performance this time. 2. What were the other key observations? Well, on a segmental basis, cement business revenues contracted by 1% year-on-year due to lower cement offtake. Realizations in this segment were much stronger in comparison to the previous quarters and were up 11% quarter-on-quarter and 14% year-on-year. Overall cost base was stable as the decline in freight expenditure helped mitigate the higher staff expenses. A combination of higher realization and steady costs had a positive impact on EBITDA per ton, which came in at 1443 rupees for the quarter. Power business performance was also disappointing as volumes contracted 14% this time. Weak demand and higher input costs had an adverse impact on the margins too. 3. What's the outlook on the company? Well, Shree Cement has been diversifying its geographic footprint by expanding capacities in newer regions. In Q1, the company has commenced commercial operations and production at its Jharkhand-based grinding unit. Besides, the company is in the process of setting up new plants in Maharashtra and also Odisha. On the international front, Union Cement, the UAE-based subsidiary which the company acquired in January 2018, is facing a challenging operating environment due to muted demand conditions. Now, the capex for FY20 is pegged at about 1600 crore rupees. In Q1, volume growth of cement companies suggests a stagnation in demand right now. We anticipate the weakness to persist for the next 1 to 2 quarters as the country as a whole is also witnessing demand slowdown across multiple sectors. Shree Cement trades at a premium to its peers owing to its strong balance sheet and strict cost focus. Execution, however, will be challenging as competitive intensity remains quite high and weak demand scenario also persists. Therefore, investors must tread carefully as the rich valuations might be difficult to sustain in a weak demand environment.